Will crypto bounce back? Some analysts expect that crypto markets will bounce back from the current slump within the next few months, while others expect that investor distrust will remain in the near future. In the past 2 months, the cryptocurrency markets have been subject to significant pricing changes. From its all-time high of $3 trillion in November 2021, the total value of the global cryptocurrency market cap has since fallen to its current level of $949 billion as of today. The cryptocurrency markets have been hit hard by a big sell-off because of weak global cues amid rising inflation and interest rate hikes. Investors and traders are already speculating on whether the cryptocurrency markets will recover this year. There are several points of view of professionals in the crypto business about this topic. Several industry professionals are of the opinion that cryptocurrency markets will bounce back from the recent sell-off within the next few months. However, some are of the opinion that investors will continue to be wary in the immediate future. There is a growing relationship between cryptocurrency and the financial markets. Cryptocurrencies have reacted in the same way as global financial markets, which have also been negatively affected because of 67 weak global signals. Experts believe that volatile cryptocurrency markets will persist for the near future, since inflation is expected to last for another approximately 2 years and the economy is expected to enter a recession soon. According to Sharat Chandra, Vice President, Research and Strategy at the blockchain-based identity management platform EarthID, given the high correlation between equity and crypto markets, macroeconomic headwinds such as decade-high inflation and rising commodity prices adversely impact crypto markets. The aggressive stance of the U.S. Federal Reserve on quantitative tightening to temper inflation will further aggravate the downward trend in crypto prices. Since the U.S. money supply has been growing at a rate of 18%, 3 times the growth rate, inflation will be around for a couple more years and is not transitory in nature. The current price trends of Bitcoin demonstrate that its stability cannot be guaranteed. This year is not expected to produce many outcomes for investors due to the historical trends that involve the halving cycles of Bitcoin supply. The negative market for cryptocurrencies in 2018 is likely to be a good indicator of what 2022 may bring. The price of Bitcoin could be anywhere from $14,000 to $21,000 at this time, according to key indicators estimates, which are based on historical lows that have occurred during periods of adverse market conditions. These kinds of price developments typically dissuade investors from diversifying their investment portfolios by purchasing digital assets. And if Bitcoin truly falls as low as $14,000 or even close to it, it will result in the loss of about 80% of its value from its all-time high of nearly $68,000. This would be the outcome of Bitcoin falling as low as $14,000, and there would be a much lower chance that it would bounce back to its all-time high. There are several investors who adore the unpredictability of cryptocurrencies and would gladly put their money into Bitcoin if given the opportunity to do so under the current circumstances. The major cryptocurrency exchanges have indicated that the amount of activity in the cryptocurrency market has expanded rapidly and that this increase is being followed by larger trends. Bitcoin is still the largest cryptocurrency investment to date, as seen by the increasing number of professional investors entering the market and adopting it. This indicates that Bitcoin is still the most reliable investment in cryptocurrencies. Is purchase the dip a smart investment strategy? The buy the dip idea is predicated on the premise that price declines are transient abnormalities that correct themselves over time. Dip buyers hope to capitalize on dips by purchasing at a relative discount and profiting when prices increase again. Buying cryptocurrencies at any price, let alone a fall that could become a long-term trend, is dangerous because crypto markets are volatile. Prices could rebound to their previous levels, but they could potentially fall further, leaving your investment underwater. Oleg Giberstein stated, "Many inexperienced investors have been burned by attempting to grab falling blades." He urges people committed to purchasing the dip to determine a monthly budget they are comfortable spending on Bitcoin or Ethereum purchases and not to worry too much about price fluctuations over the following 2 years.